In the meantime, this first trading day of the month of September, starting on a decidedly negative note, right off session lows at the moment, down 328, the S&P down 26, the NASDAQ lower by 105. But is what's happening today sort of a precursor for a September swoon? According to data, the S&P 500 has historically delivered its poorest return of the year in September with an average loss of just below 1%. Not a good start for Boeing, which of course is a Dow component, piling on to the problem today. It is the biggest loser on the Dow Jones Industrials, down about 2.75% or $9.91, as fears about the return of the 737 MAX will be further delayed. U.S. regulators say they actually need more time, possibly just a few more weeks, but still more time to finish their review following the grounding of the 737 MAX jet after 2 fatal crashes. Let us get to technology. The chip makers, these are the semiconductor makers which have huge revenue exposure to China. They are down for the count. Look at all of these. It's a multiple threes, as in 3% losses for everything from Broadcom to Xilinx, Analog, Infinera, Qualcomm. The Philadelphia Semiconductor Index down 2%. And of course, why? Well, we got the new 15% tariffs that kicked in on about 180 billion of Chinese goods coming in. It's not necessarily that the semiconductors are involved in that. It's just the fact that there is no end in sight or a real clear strategy for the U.S. to end this trade war with China. We need to add this bolt of lightning to the 3 storms we're watching. Manufacturing activity in the U.S. in August contracted for the first time in 3 years. The Institute for Supply Management, which is that index that captures national factory activity, dropped to 49.1. The expectation was something like 51.1. So it's below that. And by the way, any reading below 50 means contraction. Let's get to our floor show, traders and guys. In keeping with this hurricane theme right now, how do you view this? Are we starting to feel the economic outer bands, if you will, of a storm that's been soaking the rest of the globe? John Corpina.
Hey, Liz, back to school, back to work, summer's over, but the headlines are still all the same, right? I mean, we continually talk about the U.S.-China relations and how those conversations are distancing themselves. Last week and a week before that, we talked about the inverted yield curve and what those implications are. ISM number today below 50. This whole storm, like you said, and I like your verbiage there, the bands are definitely reaching out to us. And the market historically, as you said, does not perform well in September and leading into October. And I think starting off the month like this is not a good tone.
Okay, I know, not a good tone, but Alan, it is a little hard to get too worried by this manufacturing number because, you know what, personal consumption, meaning what we all buy here in the U.S., was up 10% from December to July. But the market, which is sort of a gigantic voting machine, is voting to be worried about this. And does that mean that stocks aren't the place to be right now, whether you think the economy is in trouble?
Yeah, it's easier to worry than be optimistic a lot of times. And if you look at manufacturing, it only makes up about 11% of our economy. So it's not as big an issue as it had been or it has been in the past. And the more concerning number for me was the fact that the export numbers dropped down to the level that we haven't seen since April of 2009. Now, that was obviously a very bad time. But I did love the way things looked coming into the weekend. If you looked at the close on Friday, we had a breakout of the S&P at that August range. We were making higher highs in the markets, and we were only 3% off the all-time forever highs in the S&P. So today is one day that's given back half of our gains from last week. But overall, I want to see some follow-through from what happened last Friday.
Okay, so then that brings me to Scott Bauer. Scott, Brexit seems like yet another sort of Groundhog Day situation, although it does seem like things are ramping up there, not to mention the tariffs that kicked in. China has tariffs on U.S. energy, U.S. crude that's coming in. Again, no end in sight for the trade war. Give me your sense of where stocks go in this month.
Liz, the market, just like anything else, does not like uncertainty. So if we start with Brexit here, now there's even more uncertainty about what is going on. What was the final deadline of October 31st now has possibly come into question. So that's why you're seeing just a ton of pressure on the pound here, especially versus the dollar. with China, this is not going to be resolved anytime soon. And I think going back to the conversation now about the manufacturing sector, now we're actually seeing what has happened globally start to seep into the United States here, where the manufacturing sector here, forward-looking, is now extremely concerned about these tariffs. So what does that mean? Well, it means volatility is not going away anytime soon. That being said, let me shed a little of the glass half full here. Yes, the Dow is down 300 plus points. S&Ps are down 25 points. But look at the VIX today. The VIX is not up that much. You can say it's up 4%, whatever it is. On a day like this, beginning of September, if we'd sold off this much, I would have expected it to be up a lot bigger.
All right.
That's a great point. Very good point.
Yeah, right, John. And
yeah.
I don't want to ignore the metals here, guys. We did have gold coming down because as we look at gold at the moment, now it's up about it was up about $27. So that fear trade is still kind of in play, right, John?
Absolutely. I think it is there, and I am supportive of this market. I think this market does run higher, and as Alan said, it's easier to be pessimistic than optimistic here. I just want to translate Friday's activity. It was the end of the month,
yeah.
And I know it wasn't the end of the quarter, but we did see a little bit of window dressing considering all the volatility that we saw the prior 2 weeks. I am a believer in this market, and the VIX point I think is very good. I mean that should be up another 2% in this type of tape.
Okay, guys, great to see you all. Thank you so much, John, Alan, Scott. We've got this just in. American Airlines stock is moving higher on